Afternoon, everybody. Welcome to today's webinar. This is Adrian speaking, I'm going to take you through today's trading opportunities. That's really the purpose of today. Let's keep it nice and simple, shall we? Just want to make sure we're all coming through loud and clear. If you can hear me, please do let me know because we have now officially started. So just type hi, hello, something like that into the questions box. Ken, thank you for doing that. Marguerite, thank you as well. Jonathan, Robert, Margaret, Mohammed, lovely, thank you. Okay, so the purpose of today's session, so these Tuesday screen shares that I do, I generally talk about a different topic each week, and the purpose is just to give a little bit of extra color on what's going on, something in addition to what we normally do in our sort of introductory webinars that we do 3 or 4 times per week. So the purpose of this is just to give you a bit more color, a bit more in-depth information about what's happening, the way in which we trade here. We could be talking about cryptos, could be stocks, could be Forex, could be the news and events, it could be about strategy, all sorts of different topics. I tend to go through and rotate them over like a 2 to 3, 4 month basis. Now, today's session is to go through sort of almost like the act of actually placing identifying the trades themselves. So we're going to be going through identifying trades that are setting up today for tonight that our members will be looking at this evening, what we'll be then doing them, what I like about them, what I don't like about them, that sort of thing. So if you're not a Trendsignal member yet, this gives you a really good sort of introduction into what it might be like if you were using this system on a day-to-day basis. Those of you that are Trendsignal members, great, hopefully this just gives you a little bit of extra color, a little bit of extra support in that regard as well. Okay, so this is live. I'm talking right now. I am a real person and you can interact with me. Bear with me a second. Sorry, I've got a bit of a cough. You can interact with me and so on. Now, we are streaming on the likes of YouTube and Facebook and so on for this particular event. But if you're on good old GoToWebinar, which is better for interaction, just simply because I can't follow on every single streaming place. It's just far too much, far too difficult. But if you're on GoToWebinar, then you can get involved if you're on a smartphone or tablet, hit the questions button there. If you're on a laptop, smartphone, laptop or desktop computer, something like that, you'll see on the right hand side of your screen, you'll see the little question bubble there and you can type in there. So if everyone could do that for me now, that'd be great. Just to give me well, just so I know I'm not talking, not on my own, that would be good. Andrew, will this be in the workshop area later? No, this is not like an official member workshop. So if you wanted to catch up on this particular event, it will be available within our Facebook and YouTube and LinkedIn channels. So you can check it out on there, Andrew, quite easily. But I know that Stuart, our head coach, is running a coaching workshop to go through the D1 accelerators that is literally happening right now. So you should have had some emails about that. Okay. Good. Lovely, 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 lovely. Let's get on with it, shall we? Quick disclaimer before we do. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Past performance is not a reliable indicator of future results. Now, I'm not going to read this whole thing, just this next paragraph. This presentation is to be prepared without regard to your investment objectives or financial situation. All opinions, news, research, analyses, prices, and other information herein are intended as general information only and are provided on the understanding that Trendsignal is not rendering investment, legal, or tax advice. Okay, so let's get going, shall we? Let's bring in some charts and let's start looking and seeing what's happening. So what I've done already today is that's cool, thank you. So what I've done so far today is had a look at the scanner. So our members have access to a number of tools, and all you need to do is whenever you've got the charts up. So what we're going to be looking at first of all is the D1 Sniper. Okay, that's the name of the strategy, which is effectively looking at Forex indices and commodities by looking at the daily chart. Okay, so each candlestick represents one day. In my experience and my opinion, this is probably the best time frame for trading for most people because it tends to suit most people's day-to-day lifestyle. So if I want to find opportunities, now I can go through them individually, like clicking on, say, Aussie dollar, and I can see previous opportunities there. or I can click on the scanning tool and I can look to run the scanner. This is typically what our members would do each day. So I can say, right, find me some D1 sniper strategy opportunities that are on this list of markets, so FX, some indices and some commodities. This is our preferred list that's pre-populated. And then I'll say, right, find me the markets that have had one of these discs over the last, say, 2 days. Now, there are a few different scans we can do, but I'm just going to focus on this for today. Hit search, and that will then provide us with an output. Now, there are quite a lot at the moment. This is actually unusually high, but that's because the markets are changing direction at the moment. So when the markets change direction, you have quite a few opportunities, and when they're faster, you get more opportunities as well. So typically, on this particular strategy, there's about 55 or so trades a month. So what's that going to be? 2.5, maybe a bit more trades per day on average per trading day. But obviously quite a few more than that at the moment, and that's really down to what's happening at this stage. But that's good. That means opportunity, doesn't it? So what I can do, if I look at here, the scanning tool, on the left-hand side, you can see the look back is 2, or really the look back is 1. What does that mean? A look back of 2 means yesterday's bar, or the prior trading day's bar, and number 1 means this current trading day's bar. So here we are at 12:30 on the 11th of October. This would mean that CAD Yen has a sniper on this current today's bar. And then Aussie Swiss had one on the prior trading's bar, which would be the 10th of October, which was Monday, yesterday. So there was one on that bar. Let's just put that quickly to the test. Let's make sure I'm just not making it all up. Aussie Swiss, you can see here. So that was a bar sniper yesterday as a sell trade, and then CAD Yen as a potential sell trade for tonight. So number 1s are effectively potential trades. Number 2s are trades that have happened or already been identified. Let's just very quickly have a look at Aussie Swiss. Let's just go through the parameters very quickly there. So what is this chart basically telling us? It's telling us that we've got one of these discs on there. That's what the scan tells us. And it was yesterday's bar. Now this is a trading opportunity because we have the line turn from green to red, and we have a red outlined sniper disc. Those are the two key things that we need on a trade, on a chart to identify an opportunity. The entry point being to the close of that bar, so end of day trading. Typically, traders looking to run these scans at sort of 8:30, 9, 9:30. Ideally, the closer to 10 p.m. the better, but sort of 9, 9:30 is usually fine. So what's happening at this point? Because we're looking to speculate on falling prices, you're seeing a market that's already on its knees. It's been absolutely battered, in fact, and yet we're looking to short it even so, which kind of goes against the way a lot of people think about trading or investing. Certainly, they think of a market that's been hammered like that and think, well, surely I should be looking to buy it. Maybe, but actually the trends at this point are down. So the weekly direction is down, the monthly direction is down. There is actually an awful lot telling us that on the balance of probability, the most likely scenario for this is this type of a move. Okay, and yes, at some point the market will start doing this, but that hasn't happened yet, and there's nothing clear. There's no clear indication that that is yet occurring. So in which case, the balance of probability is that the market will carry on the existing path it was on until new information comes to light. So if you think about it on that basis, you get the elastic band stretched, then it'll rise back up a little bit. Then it gets stretched back down, rise up a little bit. And of course, you can see that the moves down are bigger than the moves back up, which then gives us a preference to taking short trades because they're bigger, therefore likely to have perhaps a better reward to risk, or we need to be less sensitivity to when we get in and get out, so it actually makes them easier to trade. The problem you have with certain buy trades in a downtrend is that by the time you get in them, they've probably done all they're going to do before the market then starts to go down again. So really what you need if you're going to trade against the trend is markets that have shown signs of moving against that trend, starting to build a picture that the trend might be reversing, or more volatile markets that tend to overshoot. So their pullbacks tend to be deeper. That's not really the case on Aussie Swiss. Anyway, I'm probably getting into far too much detail. So what's happening here is that the market is rotated lower, hence that line changing from green to red. And the context of it is such that the weekly trend is also in a downtrend. The monthly trend is in a downtrend. There's a descending chart and candlestick pattern, so it's just basically doing this. You're seeing this orange line as well. It's orange, which basically means that the daily chart direction is also pointing lower, and then the momentum is also down as well. Yes, albeit oversold, but it is still pushing down. What this does is it gives us 5 or 6 different factors, plus one or two others, that are effectively telling us that this market's bias is to the downside. So yes, that's why we've got a sell trade there, because this pattern, this combination of these factors has historically produced really good trades, and consistently too. So that's why the sniper disc appears, in order to clearly identify for us a good pattern, solid pattern repeating itself. So a pattern that has historically produced great trades over the last 10, 11, 12 years, and it's happening again. So what do we then do with that trade? Well, there's a couple of things that we can do. Number one is what a trader might decide to do is start to compress the chart, have a look at context, have a look at support and resistance levels and so on. But that can be very, very difficult to do, particularly if a market hasn't been down at these levels for quite some time. So it's a long time ago since this market, Aussie Swiss, was down at below 62. So what we can then do is look at higher time frames and so on to try and establish support and resistance over larger durations. But again, that's very difficult to do, takes a long time. And actually, some people may not necessarily have the skills or the time to do that either. So what we do is we start members off with what we call our starter targets. So whenever you look at a particular opportunity, you have these built into this tool called TradeMate, which is just a simple enough tool that's there designed to help us to know how to manage a particular trade. So what we can do with this is we can customize a few things here, really. Let's quickly talk about this before we then speed up a little bit. So the stop loss tool, you can select your stop loss. Now, typically for new members, we just go with aggressive, which is the tighter stop. As you become experienced, you might want to give it a little bit of more room sometimes, and that's fine. Or you can set your own one, but it's customizable. So we'll just stick with the default, which is the aggressive one. So keep it as tight as possible at the beginning. That's nice. Target wise, again, we're going to go with the starter limits today, because that's just how we would start a new member off. And actually, a lot of our members will stay on those starter limits because it's just nice, sort of good, high probability targets that we don't need to apply huge amounts of discretion or anything to. They're there to try and keep a nice, clean equity curve and so on. So we're not shooting for the moon with these targets. We're going for really what the market is most likely to do. So you're not going to find in here, unless you're trading indices and commodities, you're not going to find starter targets of 400 or 500 pips, because actually that's just not very likely. The more likely scenario is 30 to maybe 120 pips. The market will more likely do that over 2 or 3 days before starting to move back the other way. And particularly for a new trader, our experience is that a high success rate, bite-size, high success rate, tends to lead to a much better psychological journey with their trading. Again, as you become more experienced, you can customize it with these other options. But for me, I'm just going to focus on the starter limits for today. You can then set your risk size. If I wanted to risk 2% of my account, 1%, you can put that in, whatever it may be. And I'm going to click on Calculate Trade Details. Now what this does, very simply, is provide me with a recommended stop loss for the opportunity, which is based on a specific technical level. It gives us a target for the opportunity, which is based on it's really based on this particular setup here, what's happening at that point, and also how that setup tends to impact this market. So when you look at this type of setup against this market, what does it tend to do? What's the more likely scenario? The more likely scenario is a move down to around 62.53, followed by probably a move back up again. So in which case, because actually if we thought it was going to carry on going lower, we'd go for a bigger target, wouldn't we? So the expectation is, look, if you're looking for a good balance of success rate and probability and reward to risk, really 62.53 is where we would expect this market to go. After that, it becomes a little bit trickier. So that's where our target's going to be. So we're entering here. There's our target, and it ended up being a nice winning trade. It already achieved that objective yesterday at £2.47 a point. What was that? Let's call it a 50-point winner. 50 times by £2.40, what's that? £125. Not bad, really. So are we all okay with this so far, everybody? Give us a quick yes or no in the questions box. Just make sure we're all cool in the gang. What is MSU and MSL? So these levels here, who's asking that? Marguerite. These are the channel lines. So MSU and MSL, this is to do with the channel, the band, if you like, within which price is typically contained. So about 95% of price action is contained within this channel. So the idea being is when prices are at the bottom, you might want to think about buying a market. But that's not always the case because often these lines can continue to bend lower. But it just gives you those lines, the values for them, should we say. Effectively, if you look at what we've got on the chart up here, Marguerite, you've got the candlestick information, and here you've got the indicator information, and also the value of the trend signal line there as well. So hopefully that's okay. All right, so that's Aussie Swiss. Let's, now that we've got this information, let's have a look at applying it to the current charts. And let's just see why the markets, why the system is identifying these. Now, point of order, just because we've got a trade here doesn't mean it will necessarily be a trade come sort of 9:30, 10 o'clock tonight. And the reason being is that this candlestick here is still being plotted because prices will be moving until 5 p.m. Eastern, until 10 p.m. tonight. What this means is if the candlestick is still being drawn, it could finish all the way down here. It could finish all the way up here. Who knows? I don't know. But actually, what we're not going to do is make a decision on this chart yet. Why? Because the indicators are still being plotted. Because if the candlestick's still being plotted, then the indicators are still being plotted. Up to this point, that's fixed and that won't change. But to the right, based on today's bar, that red line there, the point of this line and so on, they are still subject to change based on the trading that continues to happen until 10 p.m. tonight, UK time, on the Canadian dollar against the Japanese yen. So we're not going to be making our decisions until the evening. It's important to notice that. But actually, that's kind of convenient because what it means is that, we kind of know when we're going to get opportunities or not because we don't have to sit there staring at the chart all day. So what have we got happening here? Well, we've got the market looking to rotate back down. So had a big move down, big up, small up, and then starting to rotate back down again. So what you're seeing there is a descending chart pattern. So why is that? Well, very crudely, you've got a high there, you've got a high there, and that's a lower high. So this one, the second one, is lower than this one, which effectively is telling us that this is sort of things happening. Okay, so the market is looking to break lower. And just on that measure alone, it's suggesting that the market is perhaps more likely to fall than it is to rise from here. What else is happening? Well, this line here is orange and not blue. Blue is for the daily chart, this band angling higher. This is orange, so suggesting that the daily time frame is down, so that's good. The weekly time frame is lower, which means that this line here is red on the weekly chart. So there's quite a few things, as well as the momentum breaking back lower as well. So the momentum of the market is also looking lower. So there's quite a few things here telling us that whilst this market might be in an uptrend on the monthly, you can see the arrow there, a lot of other things are pointing lower. The market has tried to have a bounce after this deep fall, but actually it's just been met with a bit of resistance. It struggled to get beyond that level, and actually it's just rotating back down again. And the balance of probability would suggest, in other words, if you looked at all the trades that had a pattern like this over the last 11, 12 years, it's a pretty decent pattern. It tends to produce good winning trading opportunities. That said, there will also be from time within the last 11, 12 years some loss-making trades with this pattern as well. But overall, if you added them all up and then subtracted all the loss-making ones, it's a pretty decent outcome, which is what it's all about. Is data not on the back of a cigarette packet. It's data over thousands of trades over a long period of time. And that gives us a potential entry on CAD Yen for this evening. Now, I kind of like it. I'm quite happy with it. I don't like the rejection we're getting here. I actually prefer to be selling it at lower prices or shorting it at lower prices today. If we can get a close below that bar there from the 6th of October, that'd be nice. But notwithstanding, this is identifying a sell signal at this point. Ideally, I do tend to prefer a weaker entry bar. I like this area from this line here to the entry point to be a minimum of 40 points. And the reason for that is because otherwise, if it's too tight, if it's only just limping into a trade, it's not great enough. I need more vigor, I need more force behind an opportunity, like this bar here. Like this bar here, good separation, good fall. Clearly at this bar, bar A, the sellers were in control and they're looking to drive prices lower. Clearly on candlestick B, the buyers are in control, looking to drive prices higher. C, this current bar, I don't know actually. Sellers kind of in control, but buyers are owning this price all the way back up again. I'd like to see sellers take control back and actually look to short it at lower prices. We'll see. As I say, notwithstanding, from a signal perspective, it'll be there for this evening. So we shall be watching that very, very closely. Target wise, and I think it's important to look at this trade as well. Remember, what we look for here is the more likely scenario. So this was a target up to 106.58. So whilst this one may not have gone that far, the question is, did it go above 106.58? If you look at this pattern, what's happening at this point that generated this sniper, and you look at the way in which this market behavior impacts CAD yen, the most likely scenario is put in here on this TradeMate tool, which can be on your device at home. So this is expecting a move to 106.58 and then probably after that a fall. The reason it's saying that, because actually if we expected it to go more, again my target will be higher. That balance of probability between consistency and profitability is suggesting 106.58. What did the market do before it span off? Well, it went up to what? 106.70. So it went about 12 points through my target. We achieved our objective and then the market came off, and now it's gone down to a sell trade. And so that was a good win, wasn't it? Even though it's a bit like the difference between a team that wins the league and a team that comes third or fourth is that ability to win and grind out a win at all costs. They're scoring in the 93rd minute. They somehow manage to find a win. Like, even this is kind of thing. It's a bit like a football team that actually didn't really play very well, i.e. didn't go up very far, but we still managed it. We did enough. We found a way to win. It hit our objective and it came away with the 3 points. And that's important because it's those, we can all make money on big moves like this. That's fine. That's easy. But it's these times where it doesn't go that much. We can grind out a win. And that's the thing that makes the difference with our profitability, that ability to just notch what we need to out of the trade and go on towards making a profitable result as the month continues. It's about 35, 36 or markets, something like that, Yemi, that are in the scan. So FX, indices, commodities. I say there's quite a lot in here at the moment. That's just simply because these markets are rotating. Okay, so for this particular trade, as ever, I digress enormously. Calculate trade details, and you've got a stop loss at 106.05. You've got a take profit at 105.24, and you've got the stake per point at £3.93. So that stake per point was bigger than the example earlier, and that's because the stop loss is tighter. So this is based on risking a percentage of your account, like 2% of your account, 1%, whatever you want to set it up as. So the tighter the stop, the bigger the trade size, the stake per point you're going to do, which then keeps the monetary risk the same. Okay, so here is what we're looking at. So it's only looking for about 30 points because that's what the most likely scenario is. And actually, in reality, for this opportunity, I kind of like that as a target. If you think about what this market's doing, it's found a support level there at 105.17. It's already hit that support level once. It's hit it twice. I think it's going to struggle to get beyond it. So actually, that target of 105.24 is slightly inside that level. It's a nice looking area for a target, actually. Okay. Do I advise trading all the instruments? Well, all the instruments that are in here are markets that we do quite like to trade, Yemi. So that's really okay. There is some correlation. What I do recommend more than anything is making sure you keep that risk on a controlled basis. Seamus, what if the circle was empty and not shaded in and the momentum line was green in this trade? Would you take it? It depends if I get a sniper on the disc, really. If I get a sniper, then it's tested and measured as a good looking trade. Do I take all dual turning points that don't have snipers? Sorry, that do. I take others. Some of these that don't have a sniper, I might take as well if certain additional circumstances allow. But that's really part of phase 2 or phase 3 of our traders or members development. So today, I think we just focus on the sniper opportunities, Seamus, if that's okay. So that's CAD yen. Let's have a look at Euro Swiss. It's a market that's giving us a short trade. So when I look at this trade, it's probably useful to think, well, what am I looking at when I see this? Well, I can see that the market is breaking down. Okay, the lines turn from green to red. I've got a sniper disc, and that is identifying a fall in line with the descending chart pattern. So lower highs, lower lows, etc. A downward monthly trend, a downward weekly trend. Okay, this is a bit like your team at the bottom of the Premier League. They're just losing. They've been losing games for the last 3 months. They were losing games for the last season. They've lost some of their best players. They were sold to some of the better teams. Whatever. It's looking a little bit grim for them. There's a couple of positives in there. Maybe they made a couple of little signings. The daily trend's positive. The monthly's still positive at this point. But on balance, there's enough negativity in this chart to suggest that the balance of pressure should again be to the downside. What do I also see by looking at this chart is that sometimes I like to have a little look back. It's actually moving relatively smoothly. So what I mean by that is it's not a choppy, unpleasant chart. The rotations are kind of deep. So unless something really changed in that regard, you should hopefully get a deep move down if we get our trade signaled, and in which case actually moving through to our objective should be relatively straightforward. So there seems to be depth of movement. If I look at a market or a chart that looks more erratic, then I'm probably more inclined to ignore it and not take it, whereas something that's smoother, deeper rotations like this, I tend to be far more interested in. Marguerites, what are the VAs, the vector average? That's this red and green line that kind of cuts through the candlesticks. That's the price of that line. And then the ATR 14 is the 14 bar average true range. So it gives you a measure of the speed in which this particular market moves. So I quite like Euro Swiss. The only sort of issue perhaps with it, again, like Aussie Swiss, is perhaps the stop losses. CAD yen. Stop loss perhaps a little tight. Sometimes I like to give it a bit room. Something more than 40 points is what I like, because otherwise it can just be a little bit narrow and not enough. Like, the market needs a little bit of ebb and flow. It needs to just for it to find its feet. Let me try and explain. So when the market is sort of going up and down, when it's from there to there, it tends to move in a relative straight line, right? But what happens is the volatility tends to increase around the turning points. And the reason for that is because when the market's doing this or doing that, up or down, it tends to be quite one-way traffic. The buyers are in control or the sellers are in control. But as soon as the market tends to find some form of resistance, that conflict between buyers and sellers will start to increase. So if you have your stop loss too tight, that conflict can carry on a little bit and knock you out. You might call the trade right, and your entry might be perfect, but your stop loss might have been too tight, so you end up getting stopped out of what should have been a winning trade. So somehow you manage to snatch defeat from the jaws of victory, and that can happen. And what we generally find is if that stops less than around sort of 40 points, it tends to be not enough because of that sort of natural ebb and flow, that natural trading volume that's going to be there, that sort of almost like random oscillation that takes place on pricing before that trend can really start to kick in. You don't want to get chopped out on that. If you're going to be stopped out, it wants to be a more sort of discernible movement, if you like, rather than just the way in which the markets tend to just oscillate. As I say, that's probably perhaps the right word. So I'm quite happy with it. As I said, based on the way in which these trends are moving, I think I can see why the system has identified it, and I like the smooth rotations. Now, that is something that you add as values as an individual. So you look at the chart and go, I like that. But actually, the system doesn't really look at that. The system looks at purely what the system is telling it, which is chart patterns, monthly trends, weekly trends, fib patterns, this daily trend, momentum, how overbought or oversold we are, and a few other bits and pieces as well. Okay, Ken Lloyd. When there is a monthly and weekly downtrend, the market will go down more than it goes up. Yes, that's the principle. So what you're looking for is whether the market is more likely to do this or the market is more likely to do this. And I like sports analogies. It's the same principle. If you're going to bet on a football team, you're looking at whether the football team is um, an informed team or a poor form team. Okay, so you think of it in exactly the same way. So this is your Manchester City. This is your, I don't know, Nottingham Forest, for example. Okay, I've got nothing against Nottingham Forest, but let's face it, they've had a bit of a bad run. Okay, now what did they do? They drew last night, wasn't it? I think. So what does that mean? That means that perhaps they've had their little decent moment where they got a decent result. Maybe they'll have another win in the next game. I don't know, but probably on the balance of probability, they're more likely to then have another run of loss-making matches. And then they'll have a couple of games where they'll do okay, and then they'll probably on balance have a couple of loss-making matches and so on. Manchester City, by contrast, they'll probably have a good run of a few wins, then maybe they'll draw one, lose one, then they'll have a few wins, lose one, so on. Just because it loses a match doesn't mean it's ready to fall all the way down and have like 5 losses in a row, because actually the trend can still remain intact. It's not until the behavior starts to happen over a longer period, or you start to hear about the manager leaving, or you start to hear about the top players breaking their legs or whatever, you start thinking, actually, something different's happening here. Forex is exactly the same. It's just data that's just going to be measured in a slightly different way. All we need to do is work out whether we're looking at a Manchester City or whether we're looking at a Nottingham Forest. Okay? And in order to do that, you will look at exactly the same sort of stuff that you would do to back a sports team. I say exactly the same. You think of it in a certain way. You look at what's their form like? What have they done last season? Who are they playing against? Are they home? Are they away? What's the manager like? Are there marquee players playing? Are they picked? What are they doing? Whatever. A variety of things. Trading is the same. Okay. That they you have to look at those longer term trends. It's all about building an edge, because the more you can establish that longer term direction correctly, the better you will do this. Nottingham Forest have not won a game. I have no idea. I don't even like football, Will, to be honest with you. I'm a rugby man, really. But the point's the same. Okay, Ken Lloyd, I hope that makes sense. So just because the weekly and monthly trend is down, does that mean it's going to fall? On balance of probability, it should fall. It'd be more likely to fall than it is to rise, but that doesn't mean that it will fall. Because for a lot of markets, trends have to change at some point. A Manchester City going to be winning every single game for the next 35 years? I doubt it. People probably thought that about Manchester United. They have bad seasons. They have all sorts of shockers since then. The change in managers, you could say, oh, that's happening. And then, oh, change of manager, Ferguson left, and oh, it's starting to do this now. At some point, these things do change direction. And, at some point, this was still an uptrend until it then became a downtrend and so on. Hopefully, you see where I'm going with the analogy. What I find quite interesting that when it comes to trading, it's a lot of people don't think about trading in the same way, and yet if they thought about trading in a similar way that they thought about how they might bet on a sports match, they'd probably do a lot better, assuming they had the ability to make the same decisions. The problem is, how do you measure the equivalent of whether you've got a good coach or not? How do you measure whether it's a home match is being played at home or away? Of course, these are things you can't. What is it you measure? You measure different things, of course, but there are things that you can do in place of that when it comes to trading financials, and that's what this system does. It analyzes those elements, brings it into the analysis pot, if you like, from which the system can make a decision for you, a decision that is based on rigorous testing and so on. Okay, does this make sense, everybody? Give us a yes or a no. I tend to find, I find it's a good way of explaining things like that, but I'm not on the receiving end. But hopefully, that's a nice way of explaining what it is we're trying to do. Just let me know. Give us a yes or no, please, guys. Thank you very much. Okay, so what else have we got here? Look, I'm here to look at today's opportunities. I could look at some of the ones from the previous trading sessions. There've been some really nice trades, actually, like the dollar CAD and so on. That's another one that's hit target. But again, what's interesting is that you look at the buy, look at what this market's done. It's hit that recent high. What was the objective of that? Well, if you look at TradeMate, the objective was on the balance of probability, we'd expect the price to go to 138.27. What's the market done? It's gone to 138.54. It's gone about, 20 points through our target. This is a nice winning trade. Great. Thank you very much. Okay. And so let's have a look at a few more that are setting up tonight. A few indices coming with the markets rotating. That was a pretty grim buy trade against the trend. Often what you find with indices is that the depth in which they can move against the trend. So in other words, you're looking for a market that can do this, like deeper pullbacks against the trend. That's what you often get with indices. Bigger, deeper pullbacks that give us enough. We get in here, there's enough meat on the bone there before the market can start to establish and move back the other way. So the Hang Seng is picking up an opportunity for us, just like the S&Ps did yesterday, which has gone on through and hit our objectives. So a couple of ropey trades there, but some really nice short trades coming through as well. Again, that's what the stop loss is for. So the FTSE 100, the Nasdaq, sorry, the Nikkei. There, we actually hit our target on this trade here. That was a winning trade, and then we're rolling into a sell trade there. Why? Well, the daily chart direction's down, the momentum's down, descending chart pattern, descending weekly trend. Again, a lot of these factors are building towards a resumption of this. Will that happen? We'll find out, won't we, over the next few days. So that's basically where we are with these markets. You've got the FTSE 100 there as well. Again, breaking down at this point with a lot there to support that as the general direction there. Let's have a look at a few more markets. I can see, from the D1 accelerator strategy, which is a slightly faster strategy for Forex, indices and commodities on the daily chart. If I just run the scan here, there's really nothing kicking around today. What you'll find is it's odd, actually, that what we've got here is not much happening compared to quite a lot on the D1 Sniper. And that's because this strategy is earlier, it's sooner. We generally get onto the trades a day or two beforehand, and they're slightly different trades anyway. But so like pound Aussie, for example, that gave us a trade last night. Now, what was happening here? Well, you're seeing a market that's looking to ratchet its way back up now. So in fact, why don't we just compress the chart up and you can actually start to build a bit of a picture about what's happening. So if you look at the way in which this market's moving, okay, it's doing this, this, and then it went this, this, okay. So that's this buy. Let's just mark X and X. So what's happening here is the market's got in a high, a lower low really. It's got a lower high, it's got a lower low, lower high, lower low. So this market is breaking lower. Okay, so that is lower than that. Then what happens is, at some point this trend is going to change. It might not be this week, it might be in 6 months' time, you don't know, but at some point it will do. So in which case, what are you going to look for? Well, just from a simple chart pattern perspective alone, forget anything else, you're going to start to see the prices start to rotate higher. Now you could look at support and resistance and stuff, but it's horribly subjective, really difficult to do. But what you can notice on this one, well, there's a high there, and there's a low. Well, that high is higher than that, so suddenly you start to get in a higher high. That low is higher than that low, so that's a higher low. So what you're starting to do is to build actually, this market is starting to show signs of life. It's starting to demonstrate that actually, whilst at this point the monthly trend might be lower, you're starting to see a bit of a change in form starting to take place. So the longer term trend is always going to have a lag on it. Let's go back to the football analogy. It might be that they make a new signing in January, and it might be they get a new manager in January, and suddenly you get that big lift in performance because something new has happened. Markets, remember, will typically run in the same direction until something new happens, and that something new is starting to take shape. Whatever it is economically, who cares? We don't need to know because it is all demonstrated in the chart. So what happens is then we start to see, okay, now by this time the weekly has started to break higher. We've also seen that this daily band is still high. The momentum is green here at this point. So there's quite a lot. And actually, we're starting to see an ascending chart pattern as well. So there's quite a lot actually suddenly starting to look pretty good, which then makes this an attractive buy trade. It's all about building the picture. Okay. How does this compare to the D1 standard strategy? So Tim, so the D1 accelerator compared to the D1 sniper strategy, this is just faster. So the indicators are on a lower setting, so a faster sensitivity, so they turn more quickly. What that means is you typically get shorter trade duration. So on the D1 sniper, you're typically in a trade between 1 and say 7 or 8 days. The D1 accelerator, usually between 1 and 3 days, because you're in trades earlier and typically out of trades earlier as well. So I really like it because it suits my, that's great you asked the question, now he's gone offline, because it suits my personality. I don't like to stay and hold on to trades for very long, because that's, in my experience, not how the markets move. To me, markets move in bursts of speed of 3 or 4 days. So, I want to be able to identify that burst of speed early. I want to jump on it, and then I want to get out of it before that burst of speed dries up and starts to move the other way. Okay, so Tim, I think you went offline for a little bit there, and you're back now. So the difference, just principally, the difference is a slightly faster setting for the indicators, which helps us to identify trades a little bit quicker, which means a shorter trade duration. And if you didn't pick up at all, have a look at the recording that'll be posted onto Facebook and YouTube, and you can check that out a bit later on today. Okay, so that's foreign exchange. There's quite a bit to go through there. Let's have a look at some cryptos just really quickly. So this is from the Complete Crypto trader system. Quite a bit happening with cryptos. I say quite a bit. The last month or so has been quite flat. The volatility has kind of been sapped out of the market a little bit for whatever reason. You go through periods of it, don't you, where you look at, say, the market. Actually, what even was that chart that I was showing you earlier? What was that? It wasn't that one, was it? What was it? Yeah. So was it that? No, it wasn't that. It doesn't matter. You get periods where the market will move bigger, faster than others. At the moment, we're in a period where it's really not moving huge amounts of speed, but that's okay. It'll be like that. So let me just bring in here, and then I'm going to click on search. It was YFI, that was it. Yeah. So you get those periods, and actually it's just been quite flat for the last couple of weeks, just because I think everyone's maybe a bit weirded out with cryptocurrencies. I don't really know. But either way, that's what it is. But what we have here is the scan over the last 3 days here for cryptocurrencies. So you can see that YFI, whatever that crypto coin is, and a really nice sell trade that's come through there. The same principles are in place. The only real difference with this strategy for cryptos, as opposed to where I was looking at Forex indices and commodities earlier, is that all of these markets move in a slightly different way. So the way in which cryptos behave is quite different to the way foreign exchange behaves. So it's faster. It behaves differently whether it's going up or down. FX doesn't really. The way in which it moves up is pretty much the same which they move down. It's no real change. Because remember, you're just trading one currency against another. With cryptocurrencies, it's more about the desirability of an asset to go up or the panic if it goes down. People panic faster, really. Which is why, again, with stocks don't move up in the same way that they move down. They move at considerably different speeds, and cryptocurrencies probably even to a bigger degree than that. So when you look at these cryptocurrencies, it's the same principles really that are in place. We can apply TradeMate to it to look for opportunities. So for example, the take profit on this one at 76.59, the market is again looking for that sort of most likely scenario. So from YFI against the USDT, that's already gone and hit target from yesterday's trades. We've got a couple setting up for today. I'll be honest with you, I'm not a huge crypto trader, but generally speaking, these are nice enough looking opportunities. Again, you're looking at a proven strategy. You're expecting the market to go down to $40 or so from 41.40. What that's going to be 3.5% on what has actually been quite a choppy market over the last few weeks on Dash, but an okay enough looking trade in terms of the objective. You can see there looking down to 41 for the target. Also looking at TRX, a number of these markets again. This is nicer. You know, we go back to that chart I showed you earlier with nice smoother rotations. We're definitely seeing that a little bit here. I prefer this one, I think, than Dash, just simply because there's a little bit more depth to these moves, which means I've got much more potential, much more likelihood to be a profit on TRX than probably on Dash. It just looks smoother. And actually, you know, you have to look at, oh, is that it? Is that all we need to look at? Well, yeah. You know, it doesn't have to be, you know, hugely more complicated than that. When the markets are flowing better, it just means much smoother trends, which does actually just simply make it easier to trade. Okay, Ali, we're not talking about dynamic trader today, I'm afraid, but we'll probably talk about dynamic trader over the next few weeks. Actually, no, it won't be because I'm going away for the next 3 weeks. So, but at some point over the next few months, we'll talk about dynamic trader. Otherwise, log in onto one of the live trading workshops for the dynamic trader day trading program, Ali, and I'm sure they can cover off on that with you. Okay, so XLM. It's interesting, actually, XLM, because what's happening here is we're on the brink, a cusp of an opportunity. So price has clearly just moved up a little bit since I ran the scan. So XLM is actually not showing with a sniper anymore. It's on the brink, and I showed you earlier about, oh, you know, wait for candlestick to close because things may change. So price, we're right on the cusp of an opportunity here. But again, you know, it's okay, because largely because the monthly trend's pointing down, and also the market is overbought. So it's like a swing trade in line with the dominant trend of this market. So we'll keep an eye on XLM, but this could be quite an interesting one. Again, stops and targets wise, it will vary, but you know, I can't really set that now because I don't see a sniper anymore, which is annoying. So what we can also then look at is Ripple, XRP. This is similar, and this is actually a similar example to what we showed before. So what I've got here is a market that is showing a monthly downtrend, okay, and the chart pattern starting to go lower. So what does that mean? Well, you've got a market that was breaking up, it was doing this, 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 and now we're here, okay. This is where we are now. That's there. So point A, it's point A, point B, it's point B, that's point C. Okay, so this is what's happening. So what you've got there is a high, and you've got a lower high. Okay, so in order for this market to start to break lower, it's got to at some point start to post lower highs. So it's just like an essential and obvious and implied part of that journey. So if the market's going to break down, a good way, like if I'm going to take shorts, it's harder to be on the first short because I need to start to see a sign that it's starting to break. Okay, so what's happening here is we're starting to build more of a picture because the monthly trend is still down, hence the M, but also we've got a descending chart pattern too. So it's starting to show an additional sign that and actually that could end up being a new downtrend taking shape. We'll see, we're talking far too many chess moves ahead, but that's what the system will be thinking about. Like at some point, you know, if the trend's going to carry on up, that's fine. But if it's going to go down, it at some point has to post lower highs. At some point, it's got to post lower lows. You know, those chart patterns and candlestick patterns have to then emerge that our software will pick up for you cleanly, as well as the other stuff to give us more confidence for an opportunity. I think that's it for me. I'm going to call it an end to there and actually not speak for an hour like I normally end up going on to do. So we're going to call that after 45 minutes, which is a reasonable amount of time. So guys, that's it. So hopefully that's going to be a good exercise. Tells you a little bit about what we do here and perhaps how we could help you to trade. If you're already a member, hopefully that's been a really good and useful experience. If you're not a member yet, hopefully you've had a good chance to look behind the curtain a little bit and to see the systems and what sort of things we look for in order to identify opportunities and how the system works. I'd really appreciate some feedback. If you've enjoyed today's session, please let me know. Type that into the questions box. If you're not yet a member, If you'd like to speak to someone about being a member and using these tools on your device at home, then just pop your phone number into the questions box, please. That would be fantastic. Or indeed, you've got the contact information here. Just get in touch with us and you can find out a bit more about the courses and systems that we provide. But like I said, if you just pop your phone number in, I'll just get one of the team to give you a call and go through it. But otherwise, everybody, pop some feedback in. And well, I wish you a wonderful rest of the week's trading and all the best for now. Bye bye for now.